Hey everybody, Randy here again. It's been a while since my last video. I apologize. A lot of things on the go. Seems like every time I'm looking to make one, I just get sidetracked. There's so much news and information going on out there. It's tough to keep up. But anyway, a couple things at the top. Thank you for subscribing. That was a lot of surprise. All the subscribers that came on board. Appreciate that. Also the kind words that people have left. That's great to hear. And many in the comments. And FYI to some people, this is not fake news. People have asked me about the sources that I'm using to get this information. Typically, it's the internet. It's articles from DS News, Housing Wire, CNBC, other places. What I've done on the channel main page is I've posted a link to my Facebook, I guess you could say, page that supports this channel. And every time or most times when I'm talking about the news or referencing articles, I've actually posted a link and commentary of the articles in the Facebook page. So you can certainly see them there. They are real. I don't make the stuff up. Anyway, I also find it very interesting to learn what's going on across the country with everybody's experience in your own local markets. It is very interesting to see what's going on, people's opinions. Suffice to say, most locations seem to be in some sort of housing bubble scenario. That's the way it is. Now, the news update. We're talking end of the third week of July here. Per CNBC, this just came out today. Third straight month of existing home sale decreases. So not new homes, but existing homes, stuff that's listed on the MLS. Third straight month of decreases in volume of sales. June is down 0.06%. And year over year, it's down 2.2%. So from 2017 to 2018, June is down 2.2%. Home sales, however, or home sales price, the median price is at an all-time record of $276,900. So that's an all-time record, and that showed actually a 5.2% increase year over year from last June. So interesting. So we are at a top price level right now, and that's 76 straight months of year over year gains. So we're talking on a annual basis gains on as opposed to month gain and loss. According to NAR, National Association of Realtors, it takes 26 days or took 26 days to sell a home in June. That was down from 28 days from the previous June, so homes are moving pretty fast. And the national inventory is sitting at about 4.6%. 4.6 months across the board. Once again, we see a increase in new realtors coming on board. This kind of goes hand in hand with market value and opportunity as prices rise, and it happened the last housing bubble. The amount of new people taking the state test and going to real estate school and trying to become a real estate agent increases, and we find that that's what happens. People think it's let's make a buck, or I want to get in this game right now. Well, prices are going up, so there is an increase in activity amongst brand new real estate agents, so they're coming on board, so per the Mortgage Bankers Association, mortgage apps are down 2.5% from the previous week. Low inventory and higher prices are to blame. However, FHA purchase volume is increasing as conventional and VA loan options are decreasing, indicating, this apparently indicates more first-time home buyers are coming across the board, which means more 3% or down payment type programs, so there's less equity being put into new homes or purchase homes from these new buyers that are coming on board. So please realize that. That's a bit of a concern as well, too. Again, according to CNBC, homeowners are also sitting on a record amount of cash and equity in their home, but they're not tapping into it. So apparently there's $5.8 trillion worth of equity across the board here in the U.S., but it's not being tapped into like it was before. Trust me, there's been a lot of people who've taken a lot of money out of their properties, but just for whatever reason, things have slowed down in that area. Consumer confidence has dropped in housing, and that's part of the reason. And less people feel that home prices will continue to rise. So if you take out money of your property now, they're not confident we're going to still see those type of increases in gains year after year. A little hesitant to take out those the cash out of the property. Many are fearful of interest rates going up, or they are leery of the variable interest rates, typically found in HELOCs, which are home equity lines of credit. So people taking out HELOCs are concerned about that. So there are less HELOCs being written by banks these days. and more, I guess you could say, cash out refis are happening as opposed to HELOC origination. So funny enough, also in a small survey, this is a very small survey that I saw today, you could say that 70% of millennials have buyer remorse. And that's kind of interesting. So more of them are hitting the marketplace now, but more buyer remorse. Why? Due to high prices, the stress of the mortgage down payment. So obviously, as prices rise, your LTV stays the same, but your dollar value in that LTV is rising, of course. And many have tapped into their retirement savings or their savings to get that down payment, which is causing them some concern. So it's interesting to note that everyday homeowner and consumers are less excited about real estate and the housing market. I think people are starting to realize that, yeah, we only can go so far with these values and this inventory issue, and people are getting kind of anxious and angry right now. So there you go. According to dsnews.com, the mortgage industry is increasing their focus on jumbo loans to sort of keep up with and to finance the rising home prices. A group called Versus Mortgage Capital stated that they are seeing loan limit increases and non-prime lending solutions that basically include higher LTV ratios and interest-only loans. So basically what you're looking at here is when you talk about non-prime, again, that's that substitute word for subprime. So non-prime and subprime are the same thing, basically. So they're increasing their lending solutions, and they're doing it to credit-impaired borrowers and people who need alternative documentation to get loans, like self-employed or investors and things like that. Basically, people that don't fit into the box and didn't fit into the box before. So as I said, I think in the previous video, I do think it's somewhat comical, humorous, funny, coincidental that just when the market's at its very, very peak, as we've seen here with medium home price and days on market going so fast, that non-prime is back, and they're actively and openly stating that they're looking to support the non-QM type of borrowers, all right, qualified mortgage borrowers. According to Adam Data Solutions, the average home ownership tenure, so people who stay in their homes, home ownership, has increased from about just under 4 years compared at 2010 time frame to about 8 years now in 2018. So people are staying in their homes longer. There's less turnover. Many homeowners are taking the wait and see approach to the marketplace. Again, if you're looking to trade up in a home, you want to get the most for your home, but you're going to pay top price as well. If you're looking to trade down and downsize, same thing. You're going to get a good value for your home, but consequently you're going to pay probably more on a percentage average than you would for your current home for that smaller downsize home. So people are just testing the market and they're waiting to see what happens, showing a little bit of conservatism, which is interesting. Now, article in the New York Times, lumber tariffs are contributing to obviously rising new home prices. Builders are paying way more for wood and other materials, and ultimately that's being passed on to the buyer as increased pricing for their product, which makes sense. Home prices are climbing in the new homes, but the pace of construction has not increased. So builders either aren't building fast enough for various reasons, possibly cost, possibly skilled labor, not as much land out there. Housing starts have been down traditionally this year. National Association of Home Builders, there is one, states that home building confidence, I guess there's an index for home building confidence, has dropped a couple of points from 70 to 68 in June. The main issue is the rising home prices have contributed to that. And again, the concern, if you're a home builder, prices are rising, you got to raise your prices to keep up with all these additional costs you're incurring. How do you make ends meet? And they got to go to higher tier pricing to earn enough money to offset those costs and keep afloat, which seems to make sense. New York City, if you want to talk about New York City, as per Bloomberg, bubble burst. Okay, here's what they've said. Bubble burst. Price correction. Manhattan property slide. Prices are dropping. It is noticeable, very noticeable now, due to oversupply and really crazy starting asking prices. People are asking the moon, and they're not getting them, so they're dropping prices. So 54% of sales in the second quarter of this year closed below the asking price, which is quite interesting. And there was a 17% decline in sales as compared to this time in 2017. So that market's taken a bit of a hit. Buyers aren't apparently falling for the wondering what it's going to be worth 2 to 5 years from now game. It's kind of like, we're not looking that far ahead. We want to buy a place now. I'm not going to pay these outrageous prices, and we're going to work our methodology as well too. So they're working the prices downward. So the median price did drop 7.5% this quarter. It's the second year-over-year decline. So it declined a bit last year, declined again this year. So we certainly see that there's some pricing issues happening in the New York City area. Also to note, rent is dropping too. Kind of goes hand in hand. As prices are more people will be able to buy, which means they're out of the rental market or not going back into the rental market, which means the rental market will certainly feel the pinch there, and they'll have to adjust their pricing as well, which it appears that they have. Funny enough, the U.S. housing bubble entering the second stage. And we're taking a look at this now from a website called perdollarcollapse.com. According to them, and this is fairly straightforward, 3 stages of a housing bubble. There is the housing mania, where everyone's jumping on board and they're watching appreciation ride up there, and they want to buy and sell, and they can't get their hands on things fast enough, and they're overpaying. Then they're at the peak. We're kind of at the peak now, so we're entering into the peak phase or second phase of the housing bubble, second stage. And the third stage is the burst, of course. Stage 3 is the burst, when things all break loose. But we are in stage 2, or phase 2, if you want to call it, the peak. And why are they stating that? Well, they said that the supply of homes for sale are about 3 times the pace of last year's rate, which is interesting. Even though we still have low inventory across the board, at least the supply is not as bad as it was last year, I would imagine. So still have low inventory, but it's not as bad as it was before. 30 of the top 100 cities have more inventory than last year, but again, still inventory problems. But there's more, maybe more or less of poor inventory. And mortgage apps for new homes dropped about 9% year over year. Typically, new homes cost more than resale homes. That just seems to make sense. That's what we see out there. And I guess you could say that if there's more homes on the market, home buyers will look at existing homes as opposed to waiting for new home construction. There you go. Sellers can see that the values are above the last peak that was in 2006, and that they need to sell now. Especially if they missed selling the last time, they actually have a second chance now, which I think is really kind of cool. So if you didn't sell your home, or you hesitated, or thought it was going to go up last time around and didn't, well, guess what? You can do it again this time. It's 10 years later, but you know what? You got a chance if you're still in your home, which is kind of cool. I think it's very interesting. So this all together suggests that supply may be increasing as sales slow down, which is what you would expect to see during this stage of the housing bubble cycle. So instead of seeing bidding wars, you're going to now see deals that start to get done at asking price, and maybe a little less than asking price. Sellers will start to drop their prices faster. Why is this? Well, it's stated because they will see that it's starting to drop, and they should have sold last month or the month before. And some of them may start to panic and say, well, you know what, I want to make sure I sell, and they'll start to aggressively drop their price points, which will cause others to drop too, and then everything will start to slide. So again, that's what we're going to see as we move forward here. Disaster areas, yes, there's still issues. Still more homes will find themselves in default. There's still areas of lots of blue tarps out there, and you're talking Houston, we're talking South Florida, we're talking Puerto Rico. There still are locations, mainly Puerto Rico, that does have a foreclosure moratorium still present, but we are hearing that those could be lifted shortly. If that happens, there will be an onslaught of foreclosure filings. It'll be chaos down there. It's already quite chaotic, and it'll just be more chaotic when that hits the system. I'm pretty sure their court system is not equipped to handle that, nor are there enough attorneys down there as well too that can work all those deals. Again, it's tough to recover from all that, and that's what happens with natural disasters. And here we are, we're almost 2 months into the next hurricane season, so it's already, we're already here. We already had a couple named storms out there. Let's hope and pray that we have a quiet season, so we don't have I guess you could say, exponential effect of more storms on top of storms. That would not be a good thing. And again, the predictions for the storm season in at least the Atlantic Gulf is to be the same or slightly more aggressive than it was last year with a couple more named storms. So obviously every year there's X number of named storms, X number become major hurricanes, and X number are predicted to hit landfall. This year there's a slight increase in both of those. Now again, you have to watch where you get your information because there are different studies and different groups that put out this information on the storm season, and they do differ. I know University of Colorado typically has one, and it seems to be a bit lower, more conservative than the one you're going to see with the National Hurricane Center. So things, again, data is data, information is information, and it's, either way, let's hope there's less issues out there. So keeping that in mind, we go to what I think we will see in the next little while. Well, here we are, we're heading towards the end of July. And where I live down here in Florida, school starts typically August 10th, August 12th, somewhere in that time frame, depending on which county you live in. Our kids, it's August the 10th. So we typically see selling going on now and closings end of July. So people want to close their property end of July. They move in. They're setting up home, setting up shop, registering their kids in school, and off to the races it goes. That's what typically happens down here. Other parts of the country, the north, I'm not too sure what goes on in the west, but again, typically schools may start after Labor Day, so same thing happens 30 days later. End of August, we see the closings of homes, sales are completed, people are moving, getting registered for school and things like that. So we're probably going to see a little bit of uptick maybe in some value and some volume, just because we tend to see that seasonally. That happens every year. I know in our market, I know there's an uptick, and we sort of see a lot of activity, and then those are closings. That's great. But once September kind of hits and starts moving forward, everything quiets down quite a bit. So we may see some price decreases in the fall. People who didn't sell, or who couldn't sell, or were maybe holding out too long, trying to get the number they didn't get, will most likely start to reduce pricing. That could happen. So we should see a slide there. And that typically goes out through, the fall into holiday season, which, as you know, starts sort of mid-November, and people are not that concerned about real estate until the new year. So, I think we're going to see some sliding of value starting September all the way to the end of the year. We'll see, there's always that little uptick in January, but, all the economists, all the analysts are predicting that we're going to start seeing sliding now. Predictions of a recession, of more debt issues coming up, things like that. I read about it. I'm not focused enough or knowledgeable enough to comment on all those aspects of the economy. I try to stick with housing and let you know what's going on and what I think with housing. Obviously, those aspects, other aspects of the economy play into housing, etc. But I'm not, I don't think I should be commenting on those type of things. A lot of other people can. But again, just so you know that things are happening, and we'll start seeing some slide. That's the prediction. On a side note, I did see somewhere on YouTube a recent interview within 30 days. A couple of guys looked like they were talking finances. Looked like they were having an event, and they were interviewing Robert Kiyosaki, Rich Dad Poor Dad fame. Again, this was probably less than 30 days ago. And they were talking about the real estate and the housing market. And his comment was, hey, sell. Because if you got a property that's appreciated, sell. Sell it now. Chances are the ROIs or the appreciation may have outpaced your ROI. And he said that he's selling a number of his assets right now. Again, because he says his offers are too good to refuse, with cash buyers, hedge funds, other buyers, investors wanting to get in the market and grab these assets. Because of the low inventory, he just says it's too good for him to refuse. So he's selling some of his asset base, and he is a buy and hold guy. So I found that kind of interesting. But again, it just shows that he's working his magic as well too. He's looking at the marketplace, trying to understand what's going on, and making the right decisions as best you can. We don't have a crystal ball, which is unfortunate, but we do have a complete cycle that we have been through, from a normal market to high appreciation to a peak to depreciation to a very low point to a recovery point back up to even greater appreciation than we were back a decade ago. So having said that, we should take what we have learned through the past 10 years, the past housing bubble and collapse and crisis, and apply that moving forward so we're prepared. I think at this point in time, if anybody's getting caught in this bubble, they're doing themselves a disservice, because the information is there. Your knowledge is there, the history is there. Like again, you can look it up and you can read it, you can watch it, you can see it, you can learn it. It's quite easy, and don't make the same mistake twice. Or as people were saying, if you didn't get a chance to sell because you were uncertain and you were holding on during the last situation, last housing crisis, don't make that mistake again. Take advantage of it while you can. All right, guys, appreciate your time and effort once again. Hopefully, I'll crank out some more videos in less than a month's time frame. I got some ideas on some stuff I'm going to put out shortly. Other than that, appreciate your patronage. Looking forward to speaking to everybody again. Thank you.